Welcome to Building Fortunes Radio. Make sure you check us out at buildingfortunesradio.com. Along with our marketing partners, we're here to help our PM Marketing Network Lead customers build their businesses and make the world a better place. At Building Fortunes, we know how much your business means to you and the people important to you. So spread the word, tell a friend, join our newsletter, and go make a difference in your world. Now on to our show with your host, Peter Mingils.
Hello, everyone. Peter Mingils here. You're listening to us live on Building Fortunes Radio. It's www.buildingfortunesradio.com for those people that might be unfamiliar with my voice because you're a first-time listener. My name is Peter Mingils. We started this whole thing a really long time ago. It's been over 6 years. I think we have over 6,300 separate episodes on this platform that we use. But we do this because we want to shine a spotlight on people doing the right thing in home-based businesses and supporting people that do home-based business, a whole bunch of other things as well. Well, I was very active with a gal, her name is Doris Wood, who ran the MLMIA for a long period of time, and we did a guest spot with our guest host on this radio show specifically. His name is George Madiou, and George is a really good guy, and just like lots of people that are really good guys, I think you need to know about them. And Doris recently called me up and she says, "Are you doing any radio shows with George Madiou?" And I said, "No." And I say recently, it's actually been over a year. But I said, "No, Doris." She said, "You should." And let me share with you, when I get people that are as knowledgeable and as great as Doris is that says I should do something, I usually follow through. So George and I have been doing this radio show every Tuesday at 5 p.m. Eastern time for those people that keep score. But if you want to hear the previous radio shows that we've done before, if you go to buildingfortunesradio.com/TNMM, TNMM stands for Portion of George's Life, which is that he owns a network marketing magazine called the Network Marketing Magazine. So we figured it was real simple for you to be able to remember buildingfortunesradio.com/TNMM, and you'll be able to hear this as well as the previous radio shows that we've done. So I want to step out of the way. George is a really great guy. He always brings some of our really great guests, and today is going to be another great example of that. So, George, thanks for being here.
Thanks so much, Peter. Well, I'm really excited to introduce you to a new friend of mine, and I feel as though I know her for years and years and years. Her name is Gina Gaudio-Graves. And she is just an absolutely incredible and interesting person with a lot of enormous talent. She is a retired attorney, a brilliant law mind. She has experience in the network marketing industry. She's known as the Queen of Business and Marketing Strategy, the JV Queen. And Gina and I come together both as brokers for a program that is not network marketing but has helped a lot of people, and that is Wealth Preservation Trust. So, Gina, are you there?
I am. Thank you so much, Peter and George, for having me here today. I'm really excited to share our unique proprietary trust product with your listeners.
Yeah. And that's the reason why I was really excited about having you on today. As a matter of fact, I'm so glad, Peter, I've asked Gina to be part of the women who are writing an article of their expertise, of their choice, in this coming month's The Network Marketing Magazine.com, our 15th annual women's issue. And I can't wait to read your article, Gina. How's that?
I'm looking forward to finishing it.
So I'm just blown away over the powerful tool that we represent, and I'm ecstatic to know you and partner with you because you are so knowledgeable. we had Matthew Jennings on a couple of weeks ago, and I wanted to bring you on with the gentle voice of a woman who is probably more powerful than all of us put together in this wealth preservation trust. So why don't you just give us a little 1,000-foot overview of what we have, and we can go into some details after that.
Absolutely. So I am a business strategist and a leveragist, so much so that today many of my clients refer to me as Leveragina. I eat, sleep, breathe, and do leverage in business and in life. And when I first met Matt and was introduced to the Wealth Preservation Trust, what really blew my mind was how much leverage is available in it. This very unique trust product is very different than what most people think about when they hear the term trust. Usually, they think of that kind of trust that is just going to help you to avoid probate. This type of trust does so much more than that. It is both an asset protection trust as well as a tax mitigation trust. When I say asset protection trust, I mean this trust not only cannot be sued, but no judgments, liens, levies, or even divorce can touch the assets within the trust. And that's a big deal for any entrepreneur. So many entrepreneurs that I know have ended up in lawsuits that, sometimes frivolous, sometimes maybe not. But boy, to be able to get that level of protection for your assets is gigantic. It's also a tax mitigation trust. Under the Internal Revenue Code, we have a section called Section 643, and it allows you to defer income taxes and capital gains on any kind of passive income held in this particular type of trust. More often than not, we can reduce your tax liability annually by somewhere between 78 and 97%. If you're in a business that involves intellectual property, whether that's coaching, information products, mastermind groups, consulting, those are all types of intellectual property. All of that income, according to the IRS, is passive income. How would you like to turn all that income into tax-deferred income where your taxes are deferred in perpetuity? And I mean that quite literally, George. The taxes that are deferred under this particular instrument are deferred until 21 years after the death of the last of the heirs to the last of the beneficiaries. That could be hundreds and hundreds of years from now. That could even be thousands of years from now. It's a multi-generational trust vehicle. So you're really setting up a legacy, not just something that's going to help avoid probate. And in a nutshell, that's what we're talking about.
That's great. That's great. So our audience is a wide variety of people, but mainly in the network marketing industry. So how does it relate to network marketers?
Well, pretty much every network marketer I know has 1099 income, whether it's directly 1099 income from the company that they're representing, or whether they have an entity set up and their entity is giving them a 1099. Is that pretty much your experience as well, George?
Yes, absolutely.
We can only help those that have business income from a 1099 or a K-1. We can't do much at all to defer taxes on a W-2 income. So for everyone in network marketing, if you've got a tax liability that's, say, $20,000 to $25,000 or more annually, we need to talk because we can really reduce your tax liability in big ways.
So what I find is there's a large, the group of network marketers worldwide is 100 million. All right,
Huge.
I mean it's monstrous. People say that nobody makes money in network marketing. Well, you and I both know $1 million earners. We know people
Totally.
that are making, 5 figures and more. And so this trust may or may not be for every network marketer, but it certainly is for the networkers that are treating their business seriously and that are growing their business and treating it like a business. So
once you get past that $70,000 to $80,000 a year in income, that's when we really should start looking at this trust vehicle for you. You're approaching a 6-figure income, or you're already in the 6 or 7 figures. Those are the people that we can really help the most.
Yeah, and the thing is that often I end up saying to people, this is a trust that protects your assets. And so many people in network marketing have, some significant assets because they've been working all their lives. Now they've started their own network marketing business. They're tasting some success. And I say to them, this is a trust that protects your assets. Oh, and it also saves you money. So there's that 2 aspects to it, and probably a lot more than 2, but those are the 2 main features to the wealth preservation trust.
And let's talk a little bit more in depth about the asset protection part of it. Because many people that I know in network marketing, when they first hear about this trust, they say, oh, I don't need asset protection. I have an LLC set up. I'm already protected. I am here to tell you, as a retired attorney, I have personal experience in this. It is extremely easy today to do what's called piercing the corporate veil. If you were out at Walgreens one day and you forgot to bring your money with you and you said, oh, I'm just going to use my business debit card, no big deal, I'm buying a soda, you are commingling funds. If you do that even once, even a novice attorney today can potentially pierce your corporate veil of your LLC. And what that means to you is really important to understand. In fact, we talked about this on my show earlier today. When an attorney is able to pierce the corporate veil of your entity, your LLC, they not only are able to get to the assets owned by the entity, they're also able to get to your personal assets, your residence, your cars, your bank accounts, your jewelry. In today's litigious society, because year after year after year, the number of lawsuits is growing exponentially, and it's mainly lawsuits against small business owners. So you really aren't very well protected if all you have is an LLC, and those are the people that I really want to help the most, George, from an asset protection standpoint.
Yeah, absolutely. And then there's cases that even home ownership, I have people say to me, well, I have homeowners insurance. Well, there's a problem because you have your family over and you would never expect them to sue you or anything else, but grandma slips at the barbecue and breaks her hip, ends up in the hospital, and her insurance is paying part of that hospital bill, but not all of it. Well, the hospital is going to end up going after the grandchild who owns the house. And even though, grandma loves Billy, there's still a problem of like you said, litigation. And people don't realize that that's a problem.
Well, and the story you just shared, it's actually even bigger than that. In 30 states in our country, there are what are called filial responsibility statutes. A filial responsibility statute makes it the adult child's responsibility to provide for the welfare and well-being of the parent who maybe can't afford that any longer. That means shelter, food, clothing, medical expenses. So if grandma slips and falls at the grandson's house, not only might the grandson be liable in a lawsuit from the hospital, but the grandson's parents might also be liable for anything that they couldn't get from the grandson. It is gigantic. And if you have this type of trust, that can't happen to you. There's a recent case in the last 6 months that came out of Pennsylvania because they are one of the states that have filial responsibility. We're very blessed here in Florida. We do not have that. In Pennsylvania, there was a woman who was in a car accident. She wasn't even that old. She was in her 60s, I think. She ended up in a nursing home for 6 months, and she couldn't pay for the whole nursing home bill. She paid part of it, but there was a $93,000 balance. The nursing home went into her adult son's bank account and took $93,000. And you can imagine the adult son's face when he sees this. So what's he do? He sues the nursing home. He wants his $93,000 back. It ended up going all the way up to the Pennsylvania Supreme Court. He did not get his $93,000 back because of the filial responsibility statute in Pennsylvania. So there are some big things that people aren't even aware of that could put their assets at risk, both from lawsuits and things like that.
Yeah, it's just incredible. We're going to take just a minute break, and I've got a couple more questions I want to ask you. So, Peter, take it away.
I'll be right back.
Thanks for listening to Building Fortunes Radio. If you sell a product or service, then you should check out PM Marketing's NetworkLeads.com. Just visit www.networkleads.com. For over 18 years, PM Marketing has helped distributors build their home-based businesses through lead generation, website development, automated email delivery systems, and sales training. If you're looking for a way to increase your skills and increase the number of people that see your product or opportunity, NetworkLeads.com can help. To learn more, visit www.networkleads.com. Ask about their lead management system, capture pages, personalized websites, MLM training, humongous blogs, the humongous classified ad network, Building Fortunes Radio, or their webinar schedule. NetworkLeads.com can be your one-stop shop for everything you need. And now, back to our show.
We are back. Peter Mingils here with George Madiou and Gina Gaudio-Graves. And Gaudio is Gaudio-Graves. And if you want to find her, make sure you check her out on Building Fortunes Radio. We're going to have a guest page for her up as well. You can look for Gina. That's easier to spell. Or Gaudio-Graves. And I was just kind of chuckling a little bit, sadly, when she mentioned that her modified name has to do with leverage. And she obviously leverages as much as she possibly can. Watch out, Gina, if you become president, because how you leverage aid to a foreign country might.
I do not aspire to that role ever, Peter.
That's right. And for all those, I mentioned that only because as a segue towards this, if you're looking for fairness, don't look for lawyers or politicians. So that's why these trusts are so important. They don't always do what's fair. So back to you.
They really don't, do they? And
nope.
I used to practice law, but I really love entrepreneurship. If it wasn't for a car accident that left me in a hospital bed or wheelchair for nearly 10 years, I never would have become an entrepreneur, and I would have missed out on so much fun.
Wow.
So
There's
that can sometimes be great things and blessings in disguise.
Yeah, well, I'm so glad that you are the entrepreneur that you are. You know, the thing is that we have so many people in the network marketing industry, but all of us know people who can use this trust, and so it's really funny because when I got started as a broker, it was amazing to me, Gina, that all I did was I looked through my address book on the cell phone, and I just started having conversations with a lot of my friends. But one of the things that came about was the fact that there was real interest in what I was saying. And a lot of times what happened is that they ended up saying, well, let me talk to my CPA, or let me talk to my attorney. And many times the professionals would tell my friends, stay clear of it. This is too good to be true. You're going to end up in jail. And, it took me a while to respond to that. How do you respond to, really ignorant statements like that?
I cannot honestly say that in law school they taught me anything at all about trust at this level. And if I could go to Notre Dame Law School, get on to Notre Dame Law Review, and still not ever have heard of this trust until now, that should say something to people. So I usually start there. And then I say, it's the history behind this type of trust that should help you better understand that not all CPAs and attorneys are even going to have an inkling that this could exist. These trusts came out of the very, very wealthy families from the early 1800s. Families like the Rockefellers, the Carnegies, the Kennedys. They had what was called a dynasty trust. A dynasty trust is an earlier version of this type of trust. It's a multi-generational trust. It was originally designed for asset protection because back in the 1800s, we didn't even have an internal revenue system or an internal revenue code. But by the time we got to the 1900s and the Internal Revenue Service was created and the Internal Revenue Code was being written, all these very wealthy families had these dynasty trusts for many generations. And they certainly weren't going to risk having their wealth taxed. They had friends in high places, of course. The Kennedys had lots of power. So all of those very wealthy families started getting involved in making sure that the Internal Revenue Code had an exception for them. And sure enough, the section of the Internal Revenue Code that pertains to this trust that I referred to earlier, Section 643, it has been present in the Internal Revenue Code since the inception of the Internal Revenue Code. There have only been a handful of very minor changes in the language of it all these years. So it really isn't too good to be true. It really is a reality. And this type of trust really doesn't even create audit very often. It doesn't get scrutinized by the IRS at the level your CPA may have suggested that might happen. Everything about it is 100% legal as well as applicable in terms of the accounting practices behind it. We are not stretching the law. We are not going to a gray area at all. It conforms to the letter of the law.
So when I come across people, I mean, and a lot of these people are my friends, and a lot of them I know that they have some big problems, some big tax problems. I know.
Sounds like a lot of my friends.
Yeah. They have pain. And that's what this is causing. And we have a solution for them. And, really, what I ask is how will they feel having a solution to this problem that you have with your pain? And they are quite often really, really anxious to hear, and it's then when I warn them about professionals, and not so much that you shouldn't have them. You absolutely should have them, but your professional really should be somebody that is open enough to learn from the best of the best. And the foremost authority on this trust is our good friend Matthew Jennings, who's the foremost authority on this trust. And so it just amazes me. It has stopped amazing me that there are professionals that don't want to stick their neck out, and their neck doesn't have to be stuck out, but it's easier for them to say no than out of fear for themselves than to open the door to find out something new. Is that what you find?
That's exactly it. They are afraid because they don't have the knowledge, and they are not willing to stretch and look outside the box at all because of it. What we often tell clients is, there's two ways you can go moving forward once you have this type of trust. We do offer tax services. They're included for 3 years when you invest in one of our trusts. But during that time, we are happy to work with your current professional to help educate them on this type of trust, so that at the end of the 3 years, if you want to go back to working with your current tax professional, they should be able to be educated enough at that point to do a great job of handling your tax work. And I have had really great results talking to professionals, whether they're CPAs or attorneys, and giving them the facts, giving them the citations, both to statutes and to case law, and getting them to change their minds about their opinions on this type of trust being way too good to be true and something that's going to get people in trouble.
Doesn't exist. So
I'm here to tell you it really does.
No, I'm saying it. I mean, to be in jeopardy, it's a fear out of ignorance, and so yeah. So with 2 minutes left, what would you like to leave with us, Gina, about the Wealth Preservation Trust?
If you're really wondering how could this help me, the easiest way to answer that question is to head on over to wealthpreservationtrust.com and take a look at our tax savings calculator. Put some real numbers in it based on last year's tax returns and see how much this type of trust can save you. And if it's something you want to explore further, get back in touch with George or get in touch with me. Let us know that you came from the show, and we will show you exactly how this can really make a life-changing difference, not just for yourself and your current family, but for all your descendants to come as well.
Yeah, that's a fact. I'm really excited because I've been blessed with our first grandchild, and
oh, how exciting!
Yeah, and he is a beneficiary of my trust.
Oh,
and that is so exciting that someday Jacob's going to be a trust fund baby.
Isn't that going to be awesome? Know it. That is awesome.
So I'm going to do something different, and that is I'm going to bring Peter back in, because Peter has heard a number of shows that we've done on this. Do you have any questions, Peter?
No questions. Although probably the most important thing is that I am positive that most of the people that need it most don't think they do. And if you have anything to protect, you really need to take a look at this, because the stuff that comes from left field that you weren't expecting is the stuff that's going to change the course of your life negatively if you let it. So you got to put a fortress around your house. George, you're doing the things with the grandbaby. You know, a lot of people do a lot of things that they know about, and I'll just wrap this up with, you know, my explanation of why most people wouldn't do something. So, you know, when you're coming to making a decision, I say there's always 5 things that hold most people back from taking more effective control of their lives, and it forms an acronym, FUDCS. It looks a little bit like fudge sickles if you spell it out. F is the fear of failure. U is the fear of unknown. D is the fear of disapproval. C is the fear of change. S is the fear of success. And in essence, getting started with a trust like Gina's talking about and you're talking about really fits into all of those 5. They don't want to make a mistake. That's the fear of failure. They don't know what's going on. That's the fear of the unknown. They fear of disapproval. They don't want the big bad government to get in trouble, you know, to get mad at them. You know, fear of change. They might have to tell their tax accountant they need to do something different. Fear of success. I mean, who would be afraid of being able to put a real fortress around their family? But that explains it logically. So how do you fix that with education? So if you don't fix it with education, you're going to learn it the hard way. And the price of learning it the hard way is not worth it. So if you have anything to protect, then make sure you talk to Gina and make sure you talk to George. And at least then, if it's right for you, it's right for you. If it's wrong for you, it's wrong for you. But if it's right for you, you want to do it. But those 5 fears, George, if you're asking, help explain the reasons why most people don't take more control of their lives. Failure, unknown, disapproval, change, success, it fits in there, and I've been teaching that for X amount of years without even this radio show, so it applies perfectly. So that explains why a lot of people sometimes hesitate. But now that you know why they do, be the exception. Go the extra mile, find out, because the price that you will pay, that grandson that you mentioned a little bit earlier in our example, who lost the $93,000. Right. I'm betting you he wished he would have learned this lesson before the $93,000 was taken from him. And we also know that his $93,000 cost him way more in an attorney, way more in anxiety, way more in stress. I mean, the cost of that was probably triple in real-world dollar value. So for whatever that's worth, call Gina, call George, listen to more of these radio shows. So there you go, George.
Thanks so much,
Thank you for that, Peter. That was a great wrap-up.
You're welcome.
And you're so welcome, George. Thank you for having me.
Oh, thank you for being on. Back to you, Peter.
Yeah, we'll see you next time. So go to buildingfortressradio.com/TNMM. Look for Gina. If you do a search by guest name, Gina's the easy part to spell. Gaudio-Graves is the harder part. Gaudio, not really too hard, -Graves, Graves. And again, wealthpreservationtrust.com. We'll see everybody next time on Building Fortunes Radio. George will be back here next Tuesday, but this is one you probably want to listen to again. And then also, Gina, while you're here, do you want to plug your radio show? You said you do a radio show. Let's give you an opportunity for people to follow you.
Thank you so much. It's called Leverage Masters. We've been around for 10 years. We've got over 500 episodes. Each and every one has something to do with leverage for entrepreneurs, and you'll find it at askggg.com. That's askggg.com/radio. Thank you, Peter.
Perfect. You're welcome. Okay, guys, we'll catch you next time. Thanks, everyone. Bye for now.
You've been listening to Building Fortunes Radio on buildingfortunesradio.com. Thanks for listening. Be sure to check us out every Friday at 5 p.m. Eastern Time for the designated Building Fortunes Radio segment with Peter Mingils. Be sure to check out the buildingfortunesradio.com website for our featured segments. It's been our privilege to have you listen in. At Building Fortunes Radio, we wish you the success you deserve and are willing to work for. So spread the word, tell a friend, join our newsletter, and go make a difference in your world.